Boom, we are alive, ladies and gentlemen. Thank you for joining us today. Today I'm going to be taking a look at Bitcoin, Ethereum, Avalanche, Link, and with this week we'll go live, so make sure you subscribe to the channel because we're going to do a live video and take a look at any of the tokens you guys want me to. We'll probably make an extended version for that one. But let's just dive right in. For those of you that are new here or aren't new here, this is what we're studying. Wyckoff accumulation ranges. This is a really special place to learn from. I think that understanding this type of stuff gives you a lot of confidence in the markets. I know it's helped me dramatically understanding where we are and why. Again, one of the important parts here is to understand that it's not just trading ranges we're looking at, it's the volume and supply signature as well. Now, a lot of that we go into detail in our private group. It's a little bit more difficult to do on the front end here, so we generally just go over the trading ranges themselves. But what I want to do is actually start with Avalanche today, because since our last video, Avalanche is up almost 30%. And that's awesome. It's actually performed extraordinarily well. And what I want to do is take a look at this here. So this is the image that we have been sending out to our private group. And again, you can kind of note if you want to screenshot this. Again, I told you guys to screenshot this because back at that moment, Avalanche was only at $20. And yeah, we're up approximately 35% from that. So we talked about the jump across the creek and these changes in the supply signature. Again, you can do this study yourself, but it's usually easier to do with a community. So we're constantly going over this in the Discord. But ultimately, since that last video, this jump across the creek, this test we had, which was significant. I mean, this was a very significant test. I don't want to get too much into this, but again, this is the supply signature test for this entire range around the VPVR here as well. And then notice this is something called effort versus result. So this is really important. This is the amount of effort in the supply. This was the result from peak to trough of the price range here. And then the same amount of effort and the ensuing result. So it's a really important part to understand. If you see someone doing Wyckoff and they're not using volume or supply signatures, they just don't know what they're doing, I would ignore them. I've seen a few people share charts from someone like Chart Prodigy. He has no idea what he's talking about. He's largely just looking at the trading range and ignoring everything else in the macro story, or at least in the macro picture. So if you see someone doing that, just ignore them. They're still learning. Send them over our way. Maybe they can learn how to properly do it. But ultimately, we had a 12% price spread for that same amount of supply effort versus this next move up, which was a 20% price spread with a very similar amount of effort going into that. These are hugely important factors within the Wyckoff trading ranges. It's called effort versus result, and it's our volume and supply signatures. It is not just the trading range that makes these differences. It's literally everything outside of the trading range, because supply and demand is how a market is effectively made. So just for fun, we had talked about this as well. In the mid of the range here, right as the jump across the creek, I'm going to zoom in here a little bit. And it gets kind of messy just because I have so much on this chart trying to explain something. We had smaller reaccumulation ranges. This is what I call, or this is what's called scale and variance. Again, it is a beautiful study. It's part of mathematics, physics, biology. You can find if you get a PhD in any of those, you'll definitely know what scale and variance is. But it's a beautiful function. There's also a great book by Mr. Benoit Mandelbrot, the guy who created the fractal Mandelbrot set called The Misbehavior of Markets, who also takes a look at the type of scale and variant nature. So what's fun here is if we go back out to the 2 hour, we look at what we're paying attention to. This top portion now, which is our SOS, see creek backtest and SOS. Let's just label this now because we're fully into the SOS phase now. It's pretty blatantly clear. But as we zoom in here, this is on the 5 minute. Now, I don't suggest you chart on the 5 minute. It's extraordinarily unreliable, and the data here is not very useful. Some people like to day trade. I would rather make a significant amount of money in 1 year and take off 3 years instead of try to make a little bit of money every day. This just makes a lot more sense to me, and it goes along with my next step, which is going to be long bouts of meditation. Because as much as I like doing this, I also don't. I would prefer to meditate with a group of friends. So we're making sure that's on the chart. You guys, you know who I'm talking about. I'm coming to get you guys for our next group meditation. But anyways. This 5 minute reaccumulation pattern here, again, beautiful buying climax, shakeout, test, or spring test into a new SOS phase. this is what scale and variance looks like. It looks identical on the 2 hour as it does on the 5 minute, but also the bigger story, which of a lot of you are probably wondering, the daily for Avalanche here as well. So I want to point a few things out. Again, it's kind of messy because otherwise I'd have to clean this chart up, and I'm using it for educational purposes and myself. Here on the VPVR, you can see that we've bounced back into, let's give it a bit more room. Yeah, we bounced back into the bottom of this massive range. We've moved outside of that now, and we're breaking out. This SOS phase easily brings us to $30 and likely $37. Now again, here on the daily, you can see a few of these key resistance levels on the VPVR as well. As I kind of zoom in, you can see this first chunk ends at $30, and then after that, it goes pretty thin to 37. What I suspect is going to happen is we finish our SOS and we get a larger reaccumulation range that takes place here. And then we move much higher for Avalanche. But let's go one step at a time. $30. $37. Those are our key factors of resistance, not just in the price spread, which you can see on the left-hand side of the screen here, but also in the VPVR, which you can see easily here, and the diminution of that at around $37 as well. So from the 5 minute up to the 2 hour, all the way up to the daily, scale and variance. So the other thing I want to point out again is if you find people talking about falling wedges, unless they're taking place on the daily in these very long time signatures, they're highly unreliable and most of the time will just be called a fake out. This is why most people don't think technical analysis works, is because a lot of people do it wrong. Now, I did it wrong, or parts of it wrong, for a bunch of years because I figured you could find these, and you can find falling wedges on any time frame. Just as we went over, you can find a reaccumulation pattern on the 5 minute, but it is significantly less reliable in terms of what you get when you have a falling wedge for 530 days versus a falling wedge for 5 to 15 minutes. As soon as you have anything that's in the larger time variance, you're going to have a significantly higher chance of reliability. And you want as reliable as possible when you're making a trade or you're making an investment, because you want to make money, generally speaking. That's why you're in the market to begin with. Oh, and we love the technology too. Avalanche is amazing. But more importantly, this type of technical analysis really works best on larger time frames. So even though I'm showing a 2 hour time frame here for a reaccumulation pattern, which worked out flawlessly, this is some nerd chart art to the max. Like, this is as good as it gets for chart art, basically. I haven't seen anyone's chart art as psychedelic as this. But when we go down to the 5 minute, even though this is a beautiful reaccumulation range, I just want to point out it'll become highly volatile and become much less reliable. This is actually noticeable when we were within the creek jump here. So I've moved to this moment where we jumped above the VPVR and created this trading range here. This trading range had a massive, the first start of the SOS and its backup phase were incredibly powerful. The backup phase here was probably wiped out a bunch of people who were in leveraged positions. I mean, you had a 15% spread almost on the backup phase itself. These are designed in the early part of the market phase for the operator to get rid of anyone who's in highly leveraged trades. They don't want to take them along for the ride because they're usually short-term players. The longer the term the player, the more they want them to stay in with them until the end of the market, because they will hold that supply and that liquidity within the favor of the upcycle instead of just getting in and getting out of the market, which creates volatility for the market operator. And they don't want that. So they do these massive price spreads. Now I see all over the internet people like, oh, they're manipulating the market. You can only manipulate the market with money, or if it's the traditional market, with fake stuff. Now, the traditional market has a lot of that fake stuff, derivatives that don't really exist or over counting. This is one of the things that happened with GameStop. But in this market, it's much more difficult. You have a very limited and or fixed supply. Even if there are distribution cycles, investing cycles that are coming to fruition, these assets themselves are limited in quantity. You can't just make more of them. It's one of the special things about the crypto sector, and one of the reasons why we love Bitcoin. So I just wanted to share that. I thought it was a hyper valuable lesson in Avalanche, and I know all of you in the Private Bear group enjoyed it. So why people are getting some of this wrong, I don't know. Well, I do know. It's because they're not paying attention to the supply and demand figures. So I've seen a few charts where people are trying to start to call this distribution. It's not. This is an accumulation channel here for a few hundred days and the start of the SOS and backup sequence into the new sign of strength. Now, I think Bitcoin is actually going to move upwards of around 49, maybe 52, maybe even $56,000. We've seen this before. It's called a Livermore widening megaphone, and I'm going to share with you the last time we saw it. These are extraordinarily powerful and they should not be underestimated. It doesn't mean the bull market is starting today, but it's real dang close. So just for context, generally how this works is you find a Livermore pattern coming at the back of a trading range. So here for Ethereum, as an example for what I'm about to go over again in Bitcoin, the bottom of this widening megaphone pattern took place at the exact spring. So notice again the supply signature at the bottom of the spring, hugely important. As we go back to Bitcoin and take a look, look, there's a supply signature for the bottom of the spring. Same moment. The other important idea is here that this is the horizontal trading range that we're currently moving through. So the backup and SOS phases are part of this widening megaphone. Same with Ethereum, SOS, backup. Now we didn't even get to 0.7 for Ethereum here. There's just so much momentum in the market. So the same thing might happen with Bitcoin. Maybe we don't get all the way back down to the bottom of 0.7. Maybe we go to 52, 53,000 and create a smaller trading range that's between 44 and 50,000. We won't know until this next big buying climax and shakeout begins. Until then, 0.7 here in our widening Livermore pattern with our start at spring 1, this generates massive moves to the upside and it doesn't wait for people. I suspect a lot of people are going to wait for the halvening and then, oh, the bull market hasn't started yet. This widening Livermore pattern makes me think that we're just on the edge of this bull market starting full scale, which means that by approximately March of 2024, the bull market could be full swing. Now, again, just as an example, for Ethereum, we could never even get back down to the bottom of 0.7. It tried, but all it did was create a rising. Let's actually zoom in on this a little bit here. It'll be fun. I hate when it does this. It has to reload all the data. I wish it would just let me zoom in a little bit more effectively. There's probably a way to do this. I just don't remember how. There we go. So notice here the widening Livermore pattern for Ethereum versus where Bitcoin is now. They look kind of similar, don't they? I mean, like eerily similar too. So 6 to 7 here for Ethereum never came back down to the bottom of the widening Livermore pattern. What it did was it just created a trading range right near the top. The same thing could happen with Bitcoin now. So first off, Bitcoin's going higher. It's probably going to around 52,000. But does it come back down to 31 or 32,000? I have no idea. If it's super bullish, which Bitcoin looks like it's going to be, it may only come back down to 39,000. And you might see a trading range that looks like this. Bam. Either way, I believe Bitcoin is going to make a trading range here. It's going to run up to 52,000. It's going to come back down to around 39,000. We have to wait though. It's definitely going higher, but how much lower it goes is anyone's guess. Maybe it only goes to 44,000. We're not going to know until this first shakeout commences. So we wait for the buying climax, we wait for the shakeout, and then we'll know exactly how low it's going. And it will repeat that once or twice. So just for fun, look what it did with Avalanche. Buying climax, shakeout. Secondary test, shakeout again. And you'll see that once or twice throughout this trading range. Same thing happened with Ethereum. You get your buying climax, shakeout, automatic rally, secondary test, spring, SOS, backup phase. Now, if you're in the private group, you'll have learned all this. I'm not going to type it all in for everybody. You just do your homework yourself. I've done a lot of effort. I put a lot of effort in here to try to teach you guys all this stuff. So I would appreciate it if you have any questions, just try doing this. You'll learn a heck of a lot more from doing your own thing than from simply just following my thing. But this stuff works. It's very, very powerful. So again, Bitcoin upwards of 52,000, and then we're going to see the first shakeout, and we're going to see the formation of a new trading range, something like this. And then the bull market's going to start real soon. It's going to basically feel like there was no gap between where we are in the bull market because of how powerful these signals are. If you don't believe me, look, let's go back and look at the exact same thing, because it happened with Bitcoin in the previous bull market cycle as well. Here it is. Boom. And now I'm going to just draw this roughly because I don't have the time to do it. It was super clean, which you'd want to go in and you'd want to really tack the top of each of these. You'd want to get really perfect, just so you know, like, you want to give yourself the least amount of chance for variable. So we'll thin out our, there we go. We'll zoom in a little bit more. And look, actually the same thing happened for Bitcoin here as well. It didn't even get a chance to re-come back down to the bottom of the trading range. All it did was form a very short trading range right at the top. 0.7 did not come back down. So there's very real reason to believe that the trading range we're forming right now in this horizontal trading range, starting right out of the spring, which is extraordinarily important, doesn't come much lower. That what we end up doing, oh no, I have to go all the way back. Need the other screen share in front of me so it's a bit easier to see. So again, here with Bitcoin, drawing out the lines with Bitcoin, same as we saw with Ethereum, the trading range within the top of this Livermore pattern never came back down to touch what would be effectively 0.7. All it did was create a nice horizontal trading range here, and then it went to sky high heaven. The same thing could happen here. Okay, lastly, just for fun, take a look at Fetch. Open up on your screens, do the work yourselves. Look, here's your buying climax. Here's your first shakeout. Try to go through and figure this stuff out, especially if you're in the private group. And remember, ladies and gentlemen, the sickness of the modern investor comes from lack of education, over trading, and just no one else to hang out with while they're doing the homework. So if you want the cure, go to arcanebear.com/private and sign up for the private group. It is an extremely valuable way. And remember, there's a no risk guarantee there. So if you're not happy when you go to this page and sign up, we'll just give you a refund, no questions asked. We give an extraordinary amount of value in this group. But we've also found it's more profitable for you guys when you actually have skin in the game and are paying something to learn. Otherwise, like, I'm technically giving you all this information available for free on the internet right now, but most of you will never do the homework. So once you put some skin in the game and you end up doing the homework, people will do a lot better. So we stopped doing our free group a few years ago because we just found people actually do the homework and take in the value that we're trying to provide when they have some level of skin in the game for what they're learning. Otherwise, we tried giving it away for free and people just weren't doing that. They kept asking me, like, oh, what is this thing? What's that thing? Figure it out yourself. I'm just going to teach you guys what it is, and I go over it pretty frequently. If I wasn't sick right now, I would have done it a few more times already. So both Fetch and Link right now look like they're doing something very similar. They're performing beautiful trading ranges. Same with Cardano as well. If you want, you can go back and back test this idea. Look at this horizontal trading range. Yes, you've got your buying climax, your shakeout, your first automatic rally, your test. And this is a very bullish reaccumulation range here for Cardano as well, by the way. And it's already started its SOS. There it is, SOS, right into the top of the trading range. So once you know how to use this stuff, it's applicable everywhere you want to learn what you're doing. So I highly suggest doing that. Anyways, I want to keep today's video a little bit shorter just because I'm not feeling super great. So I hope you guys enjoyed this. Remember, leave your thoughts, your comments, your questions. Share this video to as many places as you can because YouTube really likes when we do that. And then the video goes further. The last video we had was one of the most viewed videos. So thank you guys. Please keep commenting. Let the video play all the way through. Help as many more people get this information as possible because it's extraordinarily valuable and profitable, especially at this time in the market.